Hey, it's Mark from Caliber Home Loans. It is Friday, July 3rd. So we're gonna talk about the markets this week and what it's looked like in the uh, past month and what we expect to see coming up. But first, I want to wish everybody a really happy 4th of July weekend. I hope that everyone gets a chance to throttle back and enjoy the weekend a bit, whether you're staying at home or going out, whatever you're doing. Be safe out there, but hope you have a great weekend. So let's go ahead and dive right in. So this is actually Thursday's chart. So Friday, the markets closed early on Thursday. The bond market closed at 2 o'clock, and then it's closed for Friday for the 4th of July holiday, and they'll reopen on Monday. So typically, regardless of whether it's the bond markets or the stock markets, typically the day before or the day where they close the markets early, trading gets really choppy because volume reduces because everybody leaves early for the holiday weekend. But the stock market actually closed up a couple hundred, 260 points. The Dow closed up 260 points, NASDAQ up 117. So the stock market's had another good day, and that was mostly fueled by the jobs reports. So we'll get to that in a second. And so the bond market, the 10-year Treasury didn't really do much of anything today. It started to lose a little ground during the day, and then it came back towards the afternoon before the bond market closed. So the mortgage-backed securities actually took a little bit of a hit this morning. So the jobs report came out a lot stronger. They expected 3 million new jobs, and it came in at over 4 million. So that's typically very good for the economy, it's good news on Main Street. So as we've talked about before, good news on Main Street is considered inflationary, so that drives rates up. So good news on Main Street is bad news for bonds, typically. The unemployment rate was expected to come in, I think, about 13%, and it came in at 11.1. It's expected at 12, came in at 11.1, so it came in a little bit under what was expected. Again, that's good news for Main Street, and typically bad news for rates because it's considered inflationary. But as we've said for the last 3 months, the Fed jumped in there and started buying bonds and so brought the price up a little bit, and that way the rates kind of stayed pretty consistent. Pricing got a little bit worse today, but not terribly considered where we're at the open. So let's go ahead and look at the week. So the week, you can see the pricing finished higher than where we started in the week. So that means there was upward pressure of rates during the week, so it did creep up. Again, and when I say there's upward pressure of rates, I'm not talking about a quarter or 3/8 or a half a point. You know, rates may have gone up an eighth, or we might have to charge a point or a partial point for any given rate based on Monday and the difference between Monday and Friday. So it just depends on where we started, but there was upward pressure on rates this week. You know, the ADP came out. There wasn't too much surprise in that. The big surprise was the jobs report today. So it's 2 months in a row that it came in a lot hotter than expected, which is good for the economy. Let's take a look at the last month. So you can see that we had some pretty crazy dips, which forced rates up, and then rates went back down, and then there was this gradual increase in pricing. So over the last month, we're better off than when we started. There was a little bit of a decrease in pricing for rates. So rates may have been about an eighth lower in rate over the last, if you just look at the last month. And then let's just go look at, so this is back in March before the Fed started buying bonds. So you can see that this line is pretty flat. And the Fed's been in there spending a ton of money every day to keep that line flat. So they've been doing a good job. So that's really all about the market. Next week we have not too much going on, really. The big report next week would be the weekly jobless claims on Thursday. Other than that, there really isn't much going on that would really terribly move the market. Consumer credit comes out on Tuesday. You know, unless it's a huge surprise, one way or the other, doesn't really move the markets. There's some bond sales on the Treasury side. Again, unless there's a huge surprise one way or the other, not going to be a big deal. And even if there is huge surprises, I keep coming back to this, the Fed is pouring money, tons of money into the bond markets. The mortgage-backed securities, the conventionals and the governments, just to keep rates consistent. So even with everything else going on, it would normally have a much bigger impact on rates day to day. It's just not having that big of an impact. So thankfully for the borrowers, whether you're buying or refinancing, it's been a pretty even keel, and rates have been very consistent across the board. As far as mortgage products, there really hasn't been any news lately about mortgage products. You may have heard that, and we'll talk about this a little bit down the road when we get more information, but qualified mortgages, for a loan to be qualified, it has to meet certain requirements from the government. Now, Fannie Mae and Freddie Mac have what's called a patch, so they can get around these qualifications. That patch runs out at the end of the year. So they're thinking about changing the way that we look at qualified mortgages. Instead of basing on debt to income, they're going to look at some other things. And so I don't have all the news in front of me, so we'll do a special report on that, and I'll break it down for everybody. It looks like it actually might be advantageous for borrowers. It's going to be a very different landscape than any of us are used to, is from the lending side. But from the preliminary reports that I've been reading, what other people think about it, it could actually be better for consumers and make it a little bit easier for them to get into homes. So we'll have to see how that plays out. Other than that, again, I just want to wish you a happy 4th. The ops team at Caliber is off as of for Friday and hopefully the weekend. They've been working 7 days a week for months, so they need some time off to kind of spend time with their families and revisit those people they actually live with. So hopefully they get to take some time off. I know that some of them will be working over the weekend. The closers are still working to get docs out, and then I'm going to be around town. So if you need anything, if somebody says, hey, I want to buy a house and they haven't been pre-approved, give me a shout. We'll get them in the system. We're going to pre-approve, so you can put that offer in. Other than that, have a great 4th of July, and I'll see you in the next week. Thanks a lot. Bye-bye.